price of U.S. indices continued their declines last week as negative sentiment prevailed after the Federal Reserve issued a more hawkish than expected outlook at the previous interest rate meeting. The metals prices were initially resilient, although fell later in the week as the U.S. dollar strengthened. The price of energy commodities were also pushed lower last week, however, stabilized toward the end of the week. The price of indices started the week in the red as sentiment remained negative after the Federal Reserve's interest rate outlook was much more hawkish than initially forecast. With Federal Reserve members now seeing the terminal rate at 5.60%, up from their previous estimates of 5.10%. Indices and commodities could be in for a rough trading week, with U.S. Treasury yields now at their highest levels since 2008, indicating higher risk in the overall markets. Tesla prices have been lower in recent sessions as overall market sentiment continues to remain negative. However, despite recent declines in Tesla price, the company has been relatively resilient as compared to the rest of the market, with the stock stabilizing at around $245 a share at the time of writing. Tesla is set to deliver its quarterly car delivery data in the first week of October and could set the tone for the preceding earnings report set to come out later in October. Tesla recently beat its second quarter car delivery expectations, with the company maintaining strong production despite economic headwinds. Much like most of the Nasdaq Technology Index, NVIDIA's share saw stock price declines over the last few trading sessions. However, the company still maintains its dominance in the artificial intelligence, AI, chip production, with the company holding over 90% of the AI chip processor market. Furthermore, investment bank Morgan Stanley recently issued a report suggesting investors check out NVIDIA's recent dip, citing robust demand for the company's H100 chip, a key component required for the development of AI. Crude oil prices opened the week lower, however, prices bounced back, with oil prices trading over $90 a barrel. Investment bank JP Morgan issued a statement suggesting that oil prices could hit $150 a barrel if the current market conditions persist. Crude oil prices could continue to experience volatility, with OPEC Plus continuing to maintain their policy of extended production cuts. Gold prices extended their sell-off this week as the instrument experienced negative sentiment on the back of a hawkish pause from the Federal Reserve. However, with recent inflation data trending higher, investors could continue to look for inflation hedging instruments to try and run a possible inflation spike. According to recent reports, world official gold holdings have reached record highs, reinforcing the view of strong demand. Gasoline prices were slightly lower at the beginning of this week, although it did recover slightly as at the time of writing. Gasoline prices continue to lag the crude oil rally. However, the fundamentals for gasoline are still strong. Current gasoline storages are 7% below the 5-year average, according to the most recent data issued by the U.S. Energy Information Administration, while demand continues to rise as Chinese demand for gasoline rises with a recovering economy. The dynamic of lower supply and a continuing rise in demand could continue to cause volatility in gasoline prices. The EUR-USD pair has been under negative pressure ever since the European Central Bank indicated that there may not be any further rate hikes in the Eurozone. However, markets will continue to remain cautious as Eurozone inflation is set to be reported later this week. Inflation has been trending lower recently, however, there are some speculations that there may yet be a new wave of inflation. Should this materialize, the dovish stance adopted by the European Central Bank may need to be adjusted, and this can lead to volatility in the EUR-USD pair.